I want to get to the just massive growth that we've seen in the S&P and talk people through that, because listen, I say over and over again, and I say this on my show, listen, you got to invest. And I know it's not easy for everyone, and people don't necessarily have a ton of cash around that's extra, but the deal is, like, we look at the S&P, right? And the S&P is a little bit special right now, given certain stocks that are in it, but you think about that upside and you can't ignore that. Like, I really do think if you believe that inflation is coming, and I'm a believer in that for sure, you have to think of its effects on the markets, both the negatives and the positives. And I do think that we're in an environment where you have some good things. For example, the AI revolution that's going on, I feel that that's very intense and very real, while simultaneously the reality that everything is just going to keep on getting more and more expensive. Well, who usually keeps pace with inflation pretty darn well? It's usually the wealthy, and it's in part because the Fed, whether it intends to or not, somehow, keeps those interest rates really low and the sugar high on. And I suspect they're going to try to as we go into this election season again. And that has the effect of making things easier for some people and harder for others. And the unintended effect often, as we like to say in economics. Anyway, with all this in mind, those Mag 7 are pretty special, right? And when you look at the S&P 500, I think you have to understand what's driving that S&P growth.
Yeah. So
Nvidia.
Yeah, right. So geopolitically, the big theme has been, in my mind, like this BRICS versus West divide. But within the markets, there's also like another bifurcation, which is, as you point out, like the Mag 7 versus the rest of the market. And, I just looking back over the last year, a lot of people are talking about, another way of describing it is just market concentration, right? You've got 7 stocks out of the S&P 500 that represent now 1/3 of the total market cap of the index. And they're driving returns. And it's really not 7, it's 6, because Tesla's kind of grandfathered in there. Like on an equal weighted basis, the Mag 7 stocks over the last year are up over 60%. A lot of that's Nvidia, which we've talked about at length. Nvidia is up over 220% over the last year. So that's lifted the NASDAQ. The NASDAQ's up 35+%. And that in turn has listed the S&P 500 to the extent it's participating in those names. It's up 25+%. And then the equal weighted index, which just gives, not market cap weighted, but every stock of the 500 get the same allocation of 20.2%. It's only up 10%. So it's these six kind of AI driven, growthy, mega cap tech names that are really driving performance. And it's just something you really need to be aware of as an investor. When you buy an index fund, or even just sort of maybe a mutual fund or something that really resembles the index,
oh, sure.
You're putting a lot of your capital into a handful of companies, and it changes they have a different complexion from the rest of the market, right? They're much higher multiple stocks. The average Mag 7 stock is something like a 40 to 45 times earnings multiple. This compares with like a 20 PE for that S&P 500 equal weighted index.
I mean, it's one of the arguments for diversification then, and even diversification perhaps away from, say, an S&P index fund, which, by the way, if you're just getting started in investing, I still encourage. You just need to know you're getting a lot of exposure. And right now it's great, right? And it has been great. But in the interest of diversification, you also want to think through what are the other opportunities out there. We've identified a lot. I mean, that is what we do. That's what you've done your entire career. I'm a little bit more macro in terms of my approach, but you've always drilled down. By the way, just people who don't know Rob, or if you're just coming to this, we got quite a few few thousand people watching right now. So if you're just catching this for the first time, Rob has had a storied career on Wall Street as a stock picker, running billions of dollars. And so he has had to sort of drill down on what are the best opportunities within each sector and for particular companies. And the fabulous thing is we've got them at 76 Research. Rob and I co-founded this company together to try and bring you guys these stock ideas in a way that's divorced from sort of on high, right? So you don't have some institution that's coloring it. You don't have a financial news network saying, okay, we're going to push this and this and this today. And we got to really hit this because the market's on a tear and it's a bullish day versus a bearish day. The goal here is to cut through all of that noise. And so it's worth understanding at least, okay, if you're in the S&P, you've got exposure to certain things. So maybe you want to be diversifying into other things. We do have 3 portfolios that we focus on. We've got the basic income builder. We have got an inflation protection portfolio. And then we do have one that's more growth oriented called the American Resilience Portfolio. And so in each of those portfolios, you get 10 to 15 stock picks, and we change them not often. I should emphasize that. Like the idea here is not to be in and out of stocks, right? You don't want that kind of approach. But at some point when you have a really big win, and we just did, there was one company in particular that we had told you guys about a few months back. And once it reaches a certain portion of the portfolio, that's when you say, okay, it's getting a little too heavy because it's been successful. And that's when you diversify into other opportunities.